so much speculation and reach for yield is in these markets, all by design. All by design. They should be fired. I'll say that. They should all be fired. And that's what gold does. It fires them. It fires them. It puts you back in control of your wealth. Because what the Fed giveth, they are now gearing to take away. The former liquidity beneficiaries have been smashed and look incredibly vulnerable. The entire market is incredibly vulnerable. But who is the most vulnerable? Oh, I don't know. How about those households that faithfully deposit a percentage of their working earnings into a 401k or into an IRA or into a 503c or a 509, trying to save for a future event, your retirement, a child's education, a child's wedding, whatever you're trying to save for. And so you dutifully put that money in there, but who really is the benefit of that? Because right now, 62% of U.S. households hold equities as their top financial position. And so the excuse always is, well, we can't let these guys go down. We can't, what says save the baby, right? But everything that they've done has just added leverage and risk on top of risk. And I think this next time is going to be, well, it is. It's going to be far, far worse, because we're now the only thing that they can do when these markets crash is print more money. They could take us below zero. I mean, the ECB has been doing that for quite some time, and they still can't raise rates, and they still can't stop printing money. So, you know, what you're looking at here is no choice, because a market implosion is a deflationary event. The real estate market going down is a deflationary event. The only way to fight deflation, not like you got any choices, the only way to fight deflation is with inflation. But with their balance sheets at nosebleed levels and most people's debt levels, most government debt levels, I mean, they're at the highest level ever. They're at nosebleed levels. How much more debt can they raise before that confidence is shattered? We're gonna find out. I'm telling you right now, we're totally gonna find that out. But those that are going to take it the hardest, those that are going to really pay the price the most, are the normal households, just like they have through this crisis that we're in right now and every other crisis before that. I don't want your wealth to be vulnerable. I do not want your standard of living to be vulnerable. You got to have this. It's the only thing that is outside of the system. And as the Bank for International Settlements likes to say, this is the only financial asset, the only one that runs zero counterparty risk. You hold it, you own it outright, you're your own central banker. You're protecting your power, you're protecting your purchasing power. Because there are lots of things that are happening right now that always happen before a crash, always. The rich get richer. So that income and wealth inequality is at a higher level than it was even in 1928, 1929, before that stock market implosion. But what are the wealthy doing? They're getting out. Mark Zuckerberg sells stock every day as billionaires cash out. Lots and lots of billionaires. The richest Americans have sold $42.9 billion in stock this year. Have they transitioned it or have they just sold out? I don't know. I guess we'll see. Because the super wealthy are selling. Sales of stock by Americans in the Bloomberg Billionaires Index. Oh, and yet, even as billionaires sell more, their stock purchases are stagnant. Well, if this is such a great stock market and everything is so hunky-dory and all these corporations are making so much money, why are they taking their money out of the stock market? Do you think they might know something that you don't? Do you think that they might have the ability to influence things that you don't? I don't know, but what I can tell you is that pharmaceutical drug companies spend the most on lobbying efforts in Washington, and just behind them is big tech. You think they might be influencing any of the laws or the rules? A lot of our clients are selling. So I don't know that I necessarily agree that we're looking at the top of the market, but we're looking at the top of the valuation in the market. It's the purchasing power value. So what are they doing? They are pulling their money out of the stock market while they can still convert it into a hard asset. A hard asset that does not evaporate. You don't own gold if you bought an ETF. You own shares in this trust. And you don't get to dictate what the fees are. They get to dictate it. And you don't have access to the underlying gold. They have access to it. It's a completely different thing. In the physical world, what do you think? You think central banks are buying ETFs? I don't think so. They're buying physical gold. Founders and venture capitalists are deciding they want to diversify concentrated positions. All right, that sounds reasonable. Or they're looking at the market and saying, we're at the top of the market. Now, I want to clarify something with this. Because do I think the market will continue to go up? Yes, I actually do think that. As the value of these pieces of worthless paper, or even better, the digits in your computer, lose purchasing power value. Look at Turkey, which I don't have that chart here, but I'll show you next year. But Turkey had the best performing stock market in the world this past year. Not the US stock market, Turkey. They're also in, according to Steve Henke, and I would totally, officially their inflation level is running at about 21, 22%. But Steve Henke, that knows hyperinflationary events, this is his jam. He said that the real inflation numbers in Turkey are running more like 73%. I'd believe him.